As the U.S. is trying to keep China from getting access to advanced AI chips, China keeps finding creative ways to get around the U.S. restrictions. Seema Modi has that story for us in today's Tech Check. Seema?
Kelly, the hunger for Nvidia's chips spans beyond Silicon Valley, and the Chinese, in an effort to win the AI race, are doing whatever they can to get their hands on them, from smuggling chips to using cloud-based providers like Microsoft and Amazon. Keep in mind, the current export controls only apply to the transfer of physical chips. However, according to sources familiar, the U.S. administration is actively looking into further restrictions that could ask those cloud-based providers to identify the location of their customer. The Commerce Department telling us they are exploring enhanced measures to safeguard U.S. technology. We've reached out to Amazon and Microsoft for comment. Now, regulation has weighed on the semiconductor sales to China in recent years, revenues falling from 35% of global sales at its peak in 2019 to around 29% today. Minerva Technology Policy Advisors expect sales to be challenged by further regulation, with both presidential candidates mentioning chips in the last debate. Nvidia is reportedly launching a customized chip for the Chinese that appeases the current export ban, but a potential uphill battle against changing rules and regulations from Washington, Kelly.
And so, Seema, just to be clear, this is about China continuing to gain access to these advanced U.S. Is it the leading edge chips or just kind of the one level down?
It is the leading chips. They're accessing and using these workarounds, Kelly, to get access to those chips through the cloud-based providers where they can still build out AI models. And from Washington's perspective, their biggest concern is that China will be using these AI models to service their military. And that's why there's now growing questions around whether the current export controls are effective and whether more restrictions are needed.
No, 100%. It's a great story. Seema, thank you very much.
In a twist that might just reshape the global tech landscape, a significant development has captured the attention of investors and tech enthusiasts alike. China is fiercely ramping up its semiconductor industry, determined to carve a niche amid the U.S. sanctions. While American giant Nvidia currently reigns supreme in the AI and GPU realm, China is steadily nurturing its homegrown tech titans. Companies like Huawei, Alibaba, and Baidu are stepping into the ring, each aiming to challenge Nvidia's dominance. This brewing competition between tech powerhouses isn't just an industry phenomenon. It's a tantalizing saga of innovation, ambition, and geopolitical rivalry. But what exactly is boiling beneath the surface? Let's dive deeper and uncover the intricate layers of this unfolding story. Welcome back, everyone, to Investocracy.
In order to power all these AI capabilities, you actually need very powerful semiconductors, right? And in China, the focus on two prominent chip makers. Can we see some possible listings?
Yeah, that's right, exactly. Because, of course, NVIDIA's chips underpin a lot of this technology, and it has been that real question in China, given you've got those restrictions around exports of some of the most advanced NVIDIA chips. They need to be able to develop their homegrown champions. And so we're hearing that two of the most prominent in this space could be looking at listing in Shanghai as soon as this year. So this is all according to our sources. But there's Enflame, which is looking to raise up to $280 million, and then also Biren. And both of these could be looking to list on Shanghai Starboard. The Starboard, of course, has been a friendly venue to companies if they've got that sort of high growth or fast growth startup, even if it is loss-making. Biren as well, we're hearing, could be looking at listing in Hong Kong if those sorts of talks or that process for Shanghai bogs down. But both of those could be looking to file formally and list or debut as soon as the end of this year, early 2025, also possible. But as we said, that focus in China, Beijing, really pushing companies locally to develop and support and adopt new alternatives to the likes of Nvidia, and it could be that Enflame and Biren are looking to take advantage of investor appetite around these names as well.
Is there ever a dull moment in the stock market? If today's headline-grabbing news is anything to go by, the answer is a resounding no. The semiconductor arena, particularly the rivalry brewing between the United States and a rapidly advancing China, presents a captivating mix of highs, lows, and strategic plays. Let us first look at the industry's crown jewel, Nvidia. Known globally for its superior GPUs that power heavy-hitting AI models like OpenAI's ChatGPT, Nvidia has experienced booming success. However, it hasn't been all smooth sailing. Due to stringent U.S. sanctions, Nvidia has faced significant limitations in shipping its most cutting-edge semiconductors to China. But let's pause for a second. What do you get when a mighty American tech giant meets an equally determined Chinese economy, aiming to assert its position in the tech world? A fascinating tug-of-war. And that's precisely where companies like Huawei come into play. Huawei, one of China's tech megastars, isn't content with being a bystander. The company's chip design division, HiSilicon, has designed the Ascend series processors, aimed explicitly at data centers bursting at the seams with AI models. According to a Wall Street Journal report, Huawei is prepping to launch the Ascend 91C, which has the potential to go toe-to-toe with Nvidia's H100. Paul Triolo, an associate partner at consulting firm Albright Stonebridge, mentioned, "It is not just about the hardware, but about the overall ecosystem." Here, Huawei holds a lot of advantages. Indeed, with Huawei's efforts to build an encompassing software ecosystem, it's vying not only to compete, but to lead. And Huawei is not alone in this ambitious venture. Enter Alibaba and Baidu, two other prominent Chinese giants closely mirroring Nvidia in their approach. While both companies have been procuring Nvidia chips, they're also heavily invested in designing homegrown semiconductors. Alibaba's T-Head division has brought forth the Hangguang 800 AI inference chip, already speeding up recommendation algorithms on their massive e-commerce platform. Wei Sun, a senior analyst at Counterpoint Research, elucidated, Alibaba's AI inference chip has already been deployed to accelerate its recommendation system. Meanwhile, Baidu's Kunlun chips are woven into their data centers and oriented towards autonomous driving technology, a realm of exponential potential. But before we go any further, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
China's push to boost its AI capabilities in the race for global tech supremacy is facing its latest roadblock, the nation's core socialist values. Bloomberg opinion columnist Catherine Thorbeck says it's a timely reminder that a chatbot cannot have its own political beliefs. She joins us now from the Tokyo studio. Catherine, it's great to have you back on the program. So tell us about how Beijing is trying to ensure that these generative AI tools really toe the party line.
Right. So we sort of knew for a while that Beijing intended to sort of implement its internet censorship regime onto its AI tools. But new reporting came out last week that really sort of shed more light on what this actually looks like. And basically, China is forcing AI companies, big and small, to undergo sort of very rigorous tests to make sure that the outputs, that the responses from these AI models, don't say anything against the Chinese Communist Party and don't sort of speak ill of any sort of Communist Party leaders. And this process is actually very, very tedious. I mean, you can sort of restrict the amount of data and restrict certain keywords that goes into it, but this can sort of have results of not very sophisticated, AI systems. And it's really large language models, the technology underpinning these technologies, these generative AI technologies, are really sort of a black box. So trying to censor outputs is actually a very, very difficult task, and it's putting a lot of pressure on these Chinese AI companies.
Speaking of AI, how about a bit of mob joke? If AI were a mafia, Nvidia would be the godfather, handing out the chips that rule the digital underworld. But a new gang on the block, the Chinese semiconductor firms, seems poised to challenge for the throne. With immense government support and a burgeoning consumer base, China's aspirations are more than just a pipe dream. Moving on, we have firms like Byron Technology and Cambricon Technologies. Both companies have faced U.S. blacklisting, throttling their access to crucial American technologies. Nonetheless, they're not exiting the race. Instead, they are innovating within their restrictions. Byron aims its Beely series GPUs squarely at AI training in data centers, while Cambricon Technologies focuses on creating processors versatile enough for training models and running AI apps on devices. More Threads is another name gaining traction in the overcrowded tech universe. Founded relatively recently in 2020, the company has a mission to become a global GPU leader. With backing from significant investors like ByteDance, the company's MTTKUAE series is already making waves. Inflame technology, bolstered by one of China's largest tech corporations, Tencent, also joins the ranks of ambitious companies designing chips for AI and data centers. While their journey is undoubtedly fraught with challenges, these tech powerhouses symbolize China's burgeoning resolve to play in the big leagues. So, what's the takeaway here? Beyond superficial headlines, how does this rivalry manifest in stock portfolios and future investments? The answer lies in closely observing market movements and analyzing trends that shape these transformative tech giants. As these competitors strive to outdo each other, the ripple effects on global markets become increasingly evident. Investors must navigate these waters with a keen understanding of not just technological capabilities, but also geopolitical dynamics. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So I think it's definitely another sort of major roadblock. And, China is already at a disadvantage here because of sort of all-out U.S. efforts to curb access to semiconductors and advanced semiconductor manufacturing equipment, which is really, required for the AI race. So I think it's safe to say in the short term that this will probably set China back even further in its race to catch up with the U.S. when it comes to AI development. That said, I do think that the West sort of has a tendency to underestimate China. And I think, being forced to sort of approach large language models in this sort of novel way, I don't think we should necessarily underestimate or rule out how this could, in some ways, lead to more sophisticated AI bots and lead to sort of developments in this technology that the U.S. has, been trying to do for a while now, and for a number of different reasons have been trying to put sort of guardrails and censor the outputs of these AI bots, and it's a very, very difficult task. So the fact that China is sort of being forced to do this, and Chinese AI developers are being forced to do this, I think we'll sort of have to see how that eventually plays out in the long run.
Clearly, we're witnessing the dawn of a new era in the semiconductor landscape, a thrilling unfolding of technological prowess and competitiveness. The players in this epic, Nvidia, Huawei, Alibaba, Baidu, Byron Technology, Cambricon Technologies, More Threads, and Inflame Technology, are laying the groundwork for transformative advancements. The current state of these stocks reflects a market brimming with potential, yet fraught with uncertainties. On the charts, Nvidia continues to shine brightly, but don't let that overshadow the escalating strength of its Chinese rivals. Stocks of Huawei-backed initiatives have shown promising resilience, while Alibaba and Baidu's semiconductor strides make them invaluable prospects. Analysts are increasingly bullish on these companies, foreseeing substantial growth in the years to come, propelled by state backing and an insatiable domestic market. Investing now could yield unprecedented returns as these tech titans strive to redefine the status quo. What are your thoughts on this gripping battlefield of chips and AI? Will you bet on the established Nvidia or hedge your bets with rising Chinese contenders? The journey promises to be nothing short of exhilarating. Evaluating the landscape thoroughly and strategically, positioning your investments will be crucial in navigating this thrilling tech showdown. What will your next investment move be? And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.